Welcome back. Now, you'd remember the chatter from Monday when the RBI issued an advisory. So, over Monday and Tuesday, there was some pressure on the gold financing stocks because the advisory didn't point out fingers towards anybody, but it did say that there are a lot of internal issues, especially where banking correspondents are involved or third-party service providers are involved, where perhaps proper due diligence is not being done. The RBI raised issues like when gold auctioning happens, whether all the norms are being followed or not, whether the end use of gold loans, whether that's being properly monitored or not. So it, in general, was advising for more caution and higher due diligence. Well, we have to discuss that and a lot more with our next guest. We have with us Pranav Gundlapalle, Senior Analyst, India Financials at Bernstein. Pranav, thank you for taking this call. So let's start right there. What did you make of the advisory? It wasn't penalizing in nature at all for anybody, but it was pointing out to a lot of potential discrepancies which are there in the system, a little unusual. What's your stance on the listed gold financing plays right now?
Right. See, I think it was in line with the series of actions that RBI has been taking on the consumer side. So given that the gold loans have seen a significant increase, was not a big surprise. But I think on the positive side, the lack of any specific changes to the product, credit risk weight or something of that sort, was probably a sign of relief, number one. And number two, given that they had a long list of observations and have left it open for the lenders to go and fix it over the next 3 months, suggests that either A, we have this as a more widespread issue, and two, is something that they would prefer the lenders to solve themselves, not something that can be solved by extra regulations or extra risk weights or interest rate caps and stuff like
that. Got that. So, Pranav, just a quick, should we differentiate between companies which have been in the gold finance business for a long time, like Muthoot and Manappuram, right? And companies and banks who've gotten into the segment because it's such a fast-growing area. Because I remember even at the time when that, the IIFL ban happened and they clarified that you can only disburse so much in cash, right? There were conversations that, companies which only do this or have done this for a long time, I mean, there are set processes and the regulator also kind of understands how this has been happening, etc. But from some of the is this more directed towards some of the newer players who've come in that sense?
Definitely.
Yeah.
In fact, we actually think this set of regulations are positive for those who've been doing this for a long time, like Muthoot or Manappuram. Because if you look at the list of observations, those almost seem like 101 stuff that most of the gold lenders would have solved by now. And they've survived 2 decades of RBI audits. So I'd be very surprised if there is a slip up from the monoline gold lenders on some of these areas, right? And also, given that they don't have the hassle of doing agri gold lending, which is what a lot of banks focus on, I think the whole end purpose monitoring and agri documentation, etc., would also be less onerous on them. So, I see this as like you said, a greater change for banks and also other fintechs or NBFCs that have entered into the segment, especially in the context of a slowdown in unsecured lending. So there is a general shift towards more secured lending. So this is more a preemptive move from RBI to say, let's kind of tighten this before we see a flurry of new players coming.
Okay, all right. Pranav, request you to stay with us. Let's also get in the management of CSB Bank, since we're focusing on the gold financiers, and they have a fair bit of their portfolio as well that's inclined to this part of it. Mr. Mondal, the MD and CEO of the bank, joins us on the show. Hi, Mr. Mondal, good morning, and always good to have you on the show, sir. The RBI has asked lenders, they've raised some queries out there. Could you tell us, what is your analysis of it and what is the feedback you have got?
Good morning, Nigel, and good morning to your viewers. Yes, I think there was a communication from RBI on gold loan business and broad directions. And we have been working it for the last 2 years because one good thing about the supervisory process which we have now, where it's a constant supervision, is we have that opportunity to communicate with RBI and their views constantly. And as you rightly said, that we have a larger gold loan portfolio as a proportion. there has been conversations happening, which has helped us in doing a lot of the things which is being communicated through this circular. So to that extent, as a bank, we are broadly ready with most of the points. Maybe one or two we have to still work on that, and we have to communicate that compliance to RBI. But we are quite comfortable with the implementation of the circular as it has been advised.
You know, Pralay, morning, Prashant here. We just had Pranav from Bernstein, who tracks this space as well. And I was asking him whether this actually is directed towards some of the newer players. When I say newer, I don't mean, I mean recent entrants into the space over the last couple of years. Because as Pranav was saying, that some of this reads like lending rules 101, right? So this is kind of reiterating how you're supposed to go about doing this. And Pranav was saying that maybe for older lenders, and you're an old lender in this space, in the gold finance space, especially in the state of Kerala, Manappuram, Muthoot, etc. as well. So for some of the existing incumbent older players, this actually may be a little bit of a positive, just because it may be a little negative for others. I don't know how you look at it. Quick thoughts.
Yeah, good morning, Prashant. I have always taken the view that anything which is for the industry, there is no negative, positive. Everybody has to be on the same page. And hence, good long-term players will always find a way to do the business in a compliant manner. So to that extent, I don't look at it as an opportunity or as a threat. I look at it that we have to do the right things. And if you ask me what Pranav just said also, that gold loan is a very touch and feel business. And customers themselves are very comfortable when they walk into a branch and do business. And as lenders, we are also very comfortable because it's just not knowing the customer, knowing the collateral, which is the gold, and understanding that there's a lot of experience and a lot of touch and feel there. So to that extent, I think the kind of a traditional method, going through branches, doing it through the branches, having experienced people doing that business do help. And that is definitely an advantage to us for sure.
Mr. Mondal, hi, good morning, sir. You just said that you are in conversation with RBI, and then sort of you're ensuring all the regulations and the compliances are up to the mark, and there could be one or two areas where sort of you're pulling things up. Could you elaborate a little bit on that? What specifically, for a bank like CSB, what would be the concern where RBI would want you to pay greater attention? Because the advisory that came in was very wide. Right from end use of those loans, which, I mean, that end use is not being monitored, to the way auctions are happening. Just trying to understand what the Reserve Bank's concern would be from the older, more established players like CSB.
So you know, in a touch and feel business like this, where value of the loan is small and hence the number of customers and number of transactions are very high, and where the tenor of the loans are also not very long. So to that extent, there has to be a lot of proper documentation processes. Like policies are all in place for us right now. But what I think RBI wants everybody to do, I think we are a little ahead of the curve in terms of what we have already done. Thankfully, we are ready for most of it. But what we need to do more is checking on the ground that what policies and what we have rolled out is happening in 100% cases or not. And to be fair, it is very difficult to have 100% compliance on everything on the ground when you're dependent on individual people, whoever is doing it. And hence the audit processes has to be a lot more stronger. We have implemented that over the last 1 or 2 years, but we will significantly enhance that part. So I think that's the part where we need to do more audits. Let's say if you're doing 1 audit or 2 audit branches, we may need to enhance that a little bit. I think those are the areas where we want to do on the documentation and the process part.
Got it. So you need to make sure that the regulation is being followed in letter and spirit, and therefore more scrutiny and audit at the bank level or the NBFC level, as the case might be. Will this mean that there's a bit of a slowdown? I mean, the business is almost 45% of your total business, right? What was the growth that you had in mind for the gold loan portfolio? And as you go about ramping up some of these compliances and the audits, will the growth come down in the near term?
So really, let me put it this way. The growth has not happened really because of any of these issues. Growth has happened because if you look at the price of gold has gone up by anywhere between 25 to 30% in the last 1 year. And hence, if you look at the gold view, people are saying it can touch $30 to $100 also in the long run. I'm not taking a punt on that, but I'm just saying what I'm reading. So to that extent, I think that's the reason why gold business has gone up, and hence tonnage has not gone up that much. It is mostly value, and we are very conscious of that. Given all these perspectives, I think we'll continue to do well as long as our processes and compliance is good. And let me put it this way. We saw it in microfinance also many years back. Once better governance, better compliance comes, in the long run, actually business grows and business doesn't decelerate. Only the players who are following it to the letter and spirit actually takes advantage of that. So to that extent, we are very focused on what we want to do, and I don't see this as a dampener for the business. Of course, if gold prices starts coming down someday, obviously there will be a dampener, but right now this is not a dampener. If at all, this will be an accelerator in the long run for good and compliant institutions, whether it is NBFCs or banks.
All right, Mr. Mondal, so tell us, what are you factoring in? I recall Q1 was disappointing because of strategic reasons and regulatory reasons as well, but Q2, you're bounced back. Now, give and take everything with the current price of gold, what are you factoring in for your overall book as well as for gold for this fiscal? Earlier, I think you were alluding to around 18 to around 20% growth in your book. Now, what is the revised estimate, particularly with gold? As you said, tonnage hasn't gone up, but pricing has gone up.
Yes, Nigel, you're right. So, yes, Q1, we had some tactical, strategic, whatever reasons for a softer quarter. I think we have bounced back. We have continuously focused on the deposit. If you look at our deposit growth is around 25%. We have also got enough borrowings to ensure that our other liability parameters like LCR and SFR and all of that is in control. Our CD ratio is also looking good. Overall, only deposit growth is almost 35%. So I think we have focused a lot on the deposit because we thought there is a risk emerging there from a liquidity perspective. So we have invested into that and growing there. On the asset side, as I said before, that irrespective of what the market does, we will grow 30 to 50% faster than the system. We have done that. Hopefully we have done that because we know our numbers. We have to see the industry numbers. We are around 20% growth on assets, and gold has grown by around 27%. So I think gold is still sort of nose ahead of our overall portfolio growth, but I think our wholesale businesses will start picking up in the second half of the year, and so will SME. And retail is also growing. So to that extent, I'm pretty confident that we'll grow anything between 30 to 50% of the system faster than the system. And that kind of a projection still I hold.
Okay, and we'll quiz you more on the numbers, margin, outlook, etc. when you join us post your Q2 numbers. But Mr. Mondal, one final question before we let you go. You have admitted in the past, that you all were interested in inorganic growth. One of those assets that we have quizzed you about is Bank of Maharashtra. Is there some more inorganic growth that you're looking at as of now?
As I said before, it's not in I think it's a conversation is not with CSB. So I can't comment on that, but not that anything which we know of, which says that we are looking at a large inorganic growth at this point of time. If one of our investors looks at anything, I will not be able to comment on that. But at this point of time, CSB is purely focused on organic growth. Maybe some portfolio here, there will always look at depending on the pricing and the valuation. But a larger acquisition, we are not looking at as a bank. So that's the way we are looking at it.
But what if the promoter is looking at another asset? Then it's possible that they'll want to bring both these two assets together?
You have to ask them. I am not privy to that, and they have not.
We'll do that. We'll do that in the next month or so.
We'll ask Fairfax. And thank you very much, Pralay. I appreciate you joining in, and good speaking with you here on CNBC TV18. Thanks very much.
Thank you,
Pranav, thank you for waiting. Just a quick word. So what are your sort of top ideas from your coverage universe, Pranav?
Yeah, so I think amongst the larger banks, we like HDFC and Axis at this point. And we are not too bullish on the consumer lenders. We still think that there is some more downside on the asset quality. We are probably a few quarters away from what I would call the bottom of the consumer cycle. So we like the larger banks, and amongst them HDFC and Axis. Amongst the NBFCs, we like the gold loan lenders. We like Muthoot a lot. I think at this point, while there is a tailwind of a rate cut, we would stick with the secured lenders, which is the likes of Muthoot.
Mm-hmm. So, Pranav, if I could request you for a sneak peek into the season that's about to kickstart. I think one issue that everyone's going to watch out for is credit cost and any deterioration in credit quality with all this conversation around microfinance and unsecured, right? So from that perspective, if you could single out entities that may be worse off. So we need to just watch for those managements, the commentary and the numbers as well. And from the margin perspective, because that's another debate, what's happening to margins considering the rate environment that we're in? What should we watch out for? And which are the entities that could perhaps preserve margins and which are the ones that could see the maximum stress?
Right. See, I think on the asset quality front, it's all the ones with the exposure to microfinance. So the pure play microfinance lenders, you've got quite a few of them that are listed. So they will be the ones to watch out for. In terms of the larger banks, I think microfinance will be an important consideration for the likes of IndusInd, where I think the stock has most of the things going for it, except that they need to know where the bottom is in terms of the microfinance credit cost. So that's on the credit cost front. And in terms of the NBFC space, the consumer lenders, SBI cards, Bajaj Finance would be the ones where the credit costs would be the main thing to watch out for. We've seen some deterioration in the last quarter, a prolonged one for SBI cards. A continuation of that would be a negative, especially given the run-up in the last month or so, where there seems to be some assumption of bottoming out of credit costs. If that does not hold true, then we could see significant downside. So consumer lenders on the NBFC front and on the bank side, IndusInd is the one more exposed to the microfinance side. Now, on the margin side, I think we are starting to see some improvement in liquidity, which I think is a positive. So which means that we are probably at the bottom in terms of the margin pressures. Right? So I think this quarter would probably be the one with the last piece of deposit pricing increases. And the ones with fixed rate books will start getting better position as we move into easier liquidity and potentially rate cuts as well. Again, IndusInd stands out there as the one with a greater share of fixed rate book and therefore could benefit from rate cuts. And HDFC, while its loan book is not too different from the others, could see their liability costs move down with rate cuts. So they again will stand to benefit. So amongst the larger banks, with margin pressure almost coming to an end, us looking forward to rate cuts, I think IndusInd and HDFC do stand out as our topics from a margin perspective.
Got it.
Yeah.
Got it. Little short on time, but this is very, very helpful. Pranav, thanks for joining in. And we promise to get you back once the numbers start rolling in. It'll be helpful analysis. You have a good day. Thank you very much for being with us on the call this morning.